think that is only a partial step along the journey of becoming an accomplished investor, and that's similar to, I think, many people as they begin to go down the path of trying to become an investor. I had a very strong quantitative bias in selecting investments. And one of the ways I would describe that, and I think one of the tendencies that we all have, especially when we're starting out for a variety of reasons, is to have quantitative metrics that you really can rely on. And one of the reasons that would be the case is, when you're starting out and you haven't done this a whole lot, you really like to have some confidence supplied by something external that you're on the right path. And if you can do some well-established, well-trod paths of disciplines of things that have worked, boy, that seems like a pretty good basis to make a decision and to think about what's going to happen in the future. And there is absolutely nothing in the world wrong with that. I encourage that. That's really the best way to start. But I think that is only a partial step along the journey of becoming an accomplished investor. And so today, while it's important to know the technical skills, to know the accounting, to know things like the net working capital, and to think about price earnings ratios and price to book value ratios, and have these series of quantitative metrics that would tell you that something is cheap, that's good as far as it goes, but it doesn't tell you enough. There are more things. And I call the notion of doing that sort of work, which is the first step, and you really should do it, that's the idea of spotting value. What I have evolved to, and the path that I've been on for a long time, and the reason I got on that path is because I found that that notion of spotting value and thinking that those value gaps would close right after I showed up to buy some stock, it didn't work. So it's not as if I found that technique and I learned that and it worked and produced great wealth. It didn't. So you got to take the next step and try to figure something else out. So I moved from spotting value to spotting the creation of value. So instead of a snapshot, instead of a picture, how about a movie? What's this movie going to look like? How's this reel going to unfurl over time? So instead of saying that I firmly believe that something is worth this, I'm now asking myself, well, what will it be worth next year, and the year after that, and the year after that, and the decade after that? And to have some sense of something that is increasing in value over time at an appropriate rate, well, that's what I'm really hunting for, and that's what I'm really trying to find and spot. And I think this